Hello, everyone. My name is Sonny Burns. I'm a real estate investor here in New Jersey, and today I want to talk taxes, specifically about property taxes and the new Tax Cuts and Jobs Act that was just enacted by President Trump. Just signed it into law December 22nd, 2017, and there was many changes. But today I want to specifically focus on the changes to property taxes. I was really scared when I heard, there's now a cap, a $10,000 cap on any personal property taxes. And so me owning a real estate property, I own this four-family house and has $12,000 in property taxes. And we just closed last August on another property with $13,000 in taxes. So together that's $25,000 in taxes. And I thought, oh shoot, I'm limited to $10,000 now. That's $15,000 I can't deduct, and write-offs that I won't be able to write off anymore. So I thought it was a big deal. So I started looking into this bill. I went to congress.gov, checked out this Tax Cuts and Jobs Act, and I read, section 1303. It says, the bill includes so it says like you can't deduct real estate property taxes anymore except for an exception, which allows an individual to deduct up to $10,000 in state and local property taxes. I looked into it further in the actual bill, this 1,000-page document, and so you have the actual law, which said, the present law, this was before it was passed, that said, you can deduct any amount you want. You have a vacation home for 20,000 taxes, you have your personal probably 30,000 taxes, 50,000 you could just deduct it, whatever. But now the House wanted to do away with all deductions altogether, nothing, not even the 10,000. They came to an agreement after the Senate was talking, and finally that agreement, and which eventually became law, was that you could deduct up to $10,000. But this is only for personal property taxes, and that's the big misnomer, or something that no one's talking about. So for real estate, it doesn't even concern real estate, because real estate, and you can read here, thus the provision allows only those deductions for state, local, and foreign property taxes that are presently deductible in computing income on an individual Schedule C, E, or F on such an individual's tax return. Thus, for instance, in the case of property tax, an individual may deduct such items only if these taxes were imposed on business assets, such as residential rental properties. So we are safe, So I actually pulled up my tax return from 2016. And you can see, you have itemized deductions on Schedule A, and then you have like real estate deductions on Schedule E. This is all on your 1040 regular tax return. But so we have a four-family property, and so we only had a four-family property last year. So together, like I said before, we had like $12,000 in taxes, and we live in one of the four units, so we pay a fourth of it, $3,000 essentially. So on our Schedule A, under real estate taxes, we had almost $3,000, a little less than $12,000. So that's where we put it there, and the rest of the $9,000 we had on our Schedule E. So taxes almost $9,000, $8,392. And that's, Schedule E, you have your other expenses, advertising, mortgage interest, repairs, supplies, things like that. So we had, but anything, so that $10,000 limit is only on the Schedule A. So if you have rental properties, so next year our taxes are going to be much higher because we have that $13,000 new rental property that'll be there. So it's going to be more like $21,000 on Schedule E, but we'll still be able to deduct that because that is a real estate expense and it's not on the Schedule A of your personal tax return. So that's a business expense, so we're okay. You just have to worry about, so if you own a single family home, that's your primary residence, it's over 10K, then you're out of luck. But if you are a real estate investor, all your income making properties, those are okay. You'll still be able to deduct those property taxes, so no need to worry there. I confirmed that with my CPA and some other CPAs as well. But again, consult your own. I'm not a tax expert, but I want to share this information. One thing you do also want to take into consideration is the tax law for the 10,000 limit is not just property taxes, it also takes into consideration state income tax. So if you look here on your Schedule A, your income taxes plus your real estate taxes total cannot be over 10K. If it is over 10K, you can only deduct up to 10K. I'll be safe, that number will bump up to like 3,000. So as long as my state income tax, which should be similar, I'll be okay. I'll be under the 10K, but combined you can only deduct up to 10K. So that's what you got to watch out for. I hope this video was helpful. So I'm sure a lot of real estate investors are probably in the same boat as me and will be okay. They'll still be able to deduct a lot of those property taxes. If you're not and you own a big single family home, perhaps you want to maybe rent out your garage or start Airbnb-ing a portion of your home so you could write off that portion. There's many ideas you can go for. You just got to be creative. I think that's all I want to cover. Hope that was helpful. And if you liked it, leave me a thumbs up, like and subscribe. And I wish you all the best with 2018. Godspeed. Thanks. Bye.